We are. Well, hello, everybody. Welcome to CEO Chat. My name is Al Seating.
I'm Joe Asman.
Yeah, you better be Joe Asman.
Absolutely.
And Bob Pantaliano.
Yes.
Frank Spezzano.
Correct.
Two great guys.
Thank you.
Yeah, welcome. I'll shake your hand on the way out.
Right.
But great having you on the program.
Thank you.
I know you've got a lot to offer, both individually and collectively. There's a special kind of magic that happens when Bob and Frank get together. But before we talk about that, let's start with what you do on a specialty basis. We'll start with Bob. CFO 360, that's your company, is
Correct.
that right? Talk about what CFO 360 does.
Well, I fill a gap between, with small to mid-sized businesses, between maybe their accounting staff, they may have a controller, assistant controller, bookkeeper in some cases, and that gap between that person maybe and the business owner, the CEO, right? So the CEO is maybe getting some paper statements, balance sheet, maybe P&L. What I do is I'm going to take that balance sheet P&L, maybe examine it a little bit more, craft some custom reporting, and talk to the business owner a little bit more about how to understand his business and how to obviously increase his wealth.
Well, so it's not just about bookkeeping. Every now and then you've got to go behind the numbers and find out what all those individual numbers mean.
Yeah, it's data mining. It's taking a look at all those numbers and let me make sense of it for you. Let me help you understand your business from a financial perspective a little bit better.
Well, that's great. And so you know a whole lot more than just how to add and subtract. I mean, you've got to know if you're making something, I want to see the factory. If you're providing a service, I want to know what that service is.
Right. Yeah, if you're selling hours, if you're a service-based business and really selling hours, what are those hours costing you? Where are you making your money? Which client is more profitable? What's your hourly rate? What's your client profitability? What's your cash flow look like? How much money will you have a year from now, 2 years from now, and so on? So just take a look at all those scenarios.
So you step in for a small company, you might not be able to have a full-time CFO.
Yeah.
It's a huge value add in itself. And now you work now we're talking about Frank. You work with high net worth individuals generally. I mean, that's your
Basically entrepreneurs.
Would you say financial advisor, but you're more than that, right?
Yeah, a financial advisor is kind of a misnomer in that our process takes a look at the client holistically. We go from the values up. So we'll take a look at not only the finances, but sometimes how the partnership is being run, you know, if there's a partnership involved, how it impacts the family, those kinds of things. And we'll take the long-term view of how the money, if we're going to speak specifically about the money, how the money's going to last from now till whatever generation 1, generation 2,
Well, and that's multi-generational. So,
Correct.
And you mentioned you often are referred to as Uncle Frank by the children of the people. Occasionally that happens. I know I laugh, I perk up when people say things like, I found out my daughter was expecting a baby because Frank told me.
Yes, I usually know before them.
I think, but really, I mean, you work at such an intimate level, seriously intimate level with these, you almost have to become part of the family, isn't that right?
Well, we deal with the most intimate thing, Bob and I, their money. Yeah, it's really.
Wow, so that's serious.
When you think, it's very serious.
Yeah,
exactly.
that's great. But something really amazing, I have them down on my contacts list as Frank and Bob, because when you put them together, they're a monster. It's unbelievable what they do. So maybe we can talk, I know that CFO 360 and IRUS, by the way, the name of your firm is IRUS.
Correct.
IRUS. Explain that name again.
It's classical Greek, it means guardian.
Okay.
Perfect. Okay.
Another translation could be messenger from the gods or whatever, but I like guardian. That seems to be the top one in the dictionary.
Okay, but for the last 5 or 6 years, you as a guardian, you as a CFO, you've been working together.
A lot, yeah, exactly.
Let's talk about the magic of Frank and Bob. When you guys get together, let's talk about that.
Well, it's usually a client, an entrepreneur, CEO of a company, and I think it starts with Frank in a lot of respects, because Frank is the one who's going to be the quarterback here. Frank is going to be the general contractor, and if you think of it in those terms, and bringing people into situations to solve issues, to solve problems if they exist, or in the case of a startup, maybe to get the business off and running a little bit quicker than maybe they would ordinarily.
Correct. So what'll typically happen is we'll take a look at all the pieces that are going on with the client, whether it's the business, personal monies, their estate documents, et cetera, where they want to go, what their values may be, what's driving this whole thing, what they need to do for their kids or their parents or whatever. Put everything on the table and kind of try and make some sense out of all of it. See if everything kind of, in a sense, reconciles in a way, not just numerically, but their whole life picture.
Sure.
And then when you start to take a look at it, you start to look and say, you know, maybe we can make it a little better here or there, and that's where Bob
And that's when
comes
you
in.
pass the ball, in a sense.
And we work together.
I see
How'd
what
you get
mean.
together?
That's great.
How did that
We met at a
get-
board meeting.
Oh, really?
Yeah,
Okay.
Yeah.
Met at a board meeting, we had lunch, and talked
And-
about what we do
Yeah,
and how we
both
could work
Jersey
together.
guys, and we grew up in,
Well, the magic of it is as I'm conceptualizing it, let's say I've started a business and I've reached a certain level of success, might be in my 40s, let's say, or maybe
Right.
my early 50s. I have risks I need to manage, I have a family I
Correct.
need to take care of, I've got money, but I need to make sure that that's being used properly, and I call you, and you
Correct.
work with me to try to stitch a life together that includes the money.
absolutely right.
And while we're at it, I've got the startup company that I've been working in for so long,
Bob's
I
gig.
don't have the time to work on it anymore. And that's where Bob comes in.
Right, yeah.
Yeah.
So you'll come in, and your job then is to take a look at how I'm operating my business, where I'm spending my money, you take a look at cash flow, you take a look at investments.
Right.
And you make that all better.
Yeah, well, and also then I'm going to talk to Frank about that, and then we're going to work on a plan together. You know, you could kind of think of us, I was just thinking as I was sitting here, we're kind of like, in a way, like doctors, okay, like a surgeon and a cardiologist. I understand what he does, he understands what I do. I can't do what he does, he can't do what I do. But together, we understand each other's business, and by now, our methodology and how we work together to now become kind of one person that
and
you're
it also
looking
goes
for.
beyond someone who's just kind of kicking out and starting up. A bunch of our clients, actually a lot of our clients, are relatively far along in life, and we help them buy and sell businesses, real estate,
That's,
reposition. Like a lot of our clients may have, usually they have 2 homes for sure. In addition to a shore house, if they're from Jersey,
yeah.
they have big toys, maybe a plane, maybe boats, certainly boats. Could be big boats. Complicated life, second marriage, kids by both.
All those things. that
All
could be-
those things, they're in their like mid-50s,
Well,
60s, and
Right.
things have to be repositioned in a sense. And so we grab some tax attorneys, start to do the cash flows, and then determine maybe how best to position things for sale in the future.
Right.
Start to work on how to prop up the company or position it, dress it for sale in the future.
Sure.
How to bring a son in, sell it, kids, that kind of thing.
I got it. I can see where then both those functions be very important.
Oh,
I mean, at
you
some
have to
point-
have,
So,
the numerical
you're
analysis.
talking about entrepreneurs too, and a lot of people think entrepreneurs are brainy people, very smart people who pull things, and brains are certainly a part of it.
Right.
But entrepreneurs have a lot of energy and a lot of emotional baggage
Yeah,
that they
exactly.
carry with them too.
Exactly.
And an entrepreneur who starts a business is going to take a risk. They're going to be a little crazy. They're going to have sometimes they can get so jammed up in their emotional baggage that they lose sight of the practical matters that they need to take care of.
All the time. Were you looking at 2 guys who have the same issues?
Right.
I
Okay.
mean,
So
that's why we can relate.
that's that's where you guys come in. I can see where that would be a huge
Yeah,
payoff for
yeah.
For somebody who's in that
Exactly.
in that particular
The
situation.
misconception about people who start their own businesses as entrepreneurs, most people think they're in it for the money. Can tell you, typically not. They usually became entrepreneurs because they can't work for someone.
Right.
Right?
Sure.
You're looking at 2 guys,
Let's
right?
face it, I have relatives.
I'm the worst employee in the world.
I can relate. Yeah,
Can't
they just
work-
can't. They're just
Right, you can't-
unemployable in one level. and one
You
level
can't
or
work for
another.
someone. You might have a great idea. You just have the itch. And you just work hard. All of our clients are really hard workers. Nobody's clipping coupons.
They are. They work really hard.
Yeah.
But by virtue of the fact that they're working so hard on what it is they're focused on, there are things going on around them that they may not be paying attention to. So in a way, what they need is peripheral vision, and that's what you guys do.
Right. I mean, so many things fall by the wayside. The personal stuff, like making sure estate documents are cleaned up, or making sure their investments are positioned correctly. Making sure the accountant's doing a good job. Sometimes
Right.
we're brought in and we look at this stuff, and my instincts are, I don't know about this. He takes a look, and you might have to replace someone or bring someone else in addition to
Take a look at this.
those kinds of
So that
things.
switches us back to Bob then. If I'm an entrepreneur in that situation, I met you, Frank, and we've talked about how I need to build a life around this business
Right.
that I created. That includes children from prior marriages, children from my
Whatever,
current marriage,
yeah.
all those things that are in my life. I've also got a bookkeeper because I do pay taxes every year.
Right.
But my bookkeeper isn't going to do what Bob does.
No.
No.
So when you take over the books that have been managed at a certain level that are compliant with the law, what kind of discoveries do you make when you look at books like that? What is it you typically find?
Typically find that there's a lot of static reporting. Again, looking at the same P&L years after years and kind of getting so familiar with it that they're not really digesting the information.
Right.
You know, I look at a company, I'm an unemotional analyst. When I say that, I mean that, let's say, for example, you were moving into a building. And there's a certain amount of tenant fit-up that goes with moving into a building. You're going to get $100,000 to fit up the building. You want to spend $200,000. I'm going to, and you want to maybe spend that other $100,000 because it's the way you want the building to look. But I'm going to explain to you or take a look at it and say, based on your net profit, let's say you're at 10% net profit and you're going to spend another $100,000, you've got to bring in $1 million because you just spent $100,000.
Because you just spent
I'm not telling you not to spend $100,000,
Right.
but I want to make you aware of maybe the things that you're not looking at. You're looking at your business because it's your baby, and this is what I want to do with it. But I'm going to try to point out the other things maybe around the business that you may not be looking at, and just saying here.
Right. And to pick up off that exact example,
We're going to need to take a break, but I want to pick up off that example as soon as we come back. I'm still a little hung up on the fact that you guys work like two doctors, because I think of Joe, maybe you and I work like doctors, but you're the proctologist. And we're not going to probe that any more deeply when we get back. We're finished with that subject. When we get back with more CEO chat after these messages.
Stick around.
What do I want to be when I grow up? Maybe a musician? A veterinarian? Maybe an equestrian? A mommy? Well, why not be all these things and more? Consider joining me, Dr. V, with friends and colleagues as we explore a wide range of topics together. V is for variety, here on RVN TV.
There you go, Richard. Oh! Is that too hard for you?
No. Is it too hard for you?
Woo! We're playing catch now. Oh, shit.
Why should you choose Rowan College at Gloucester County? Low cost. The #1 nursing program in all of New Jersey. More than 70 programs of study, including selective admissions. With record enrollment. A premier partnership with Rowan University. Transfer options with numerous universities. 4-year degree options on our campus. Rowan College at Gloucester County. Now you're thinking.
Welcome back to CEO Chat. My name is Alcini.
I'm Joe Osamendi.
Dr. Osamendi, I presume. Welcome
Pantaliano is
back
my
to the program.
specialty.
We have Bob Pantaliano and Frank Spezzano.
Guys?
Yep.
And just before the break, Bob, you were talking about what you do that bookkeepers typically don't do, but needs to be done. So
Sure.
real quick, that again.
That again is bookkeepers is typically making sure that funds are received from customers and bills are paid, and they're also paying their vendors.
Cash flow.
Right? Yeah, cash, right? And they're also producing maybe a P&L on a quarterly basis sometimes, and a balance, probably hardly ever a balance sheet, but sometimes a balance sheet, P&L, maybe some other sales report or something like that. And what I'm doing is I'm taking that and then just bringing it to the next level. What else do you need
Great.
to know?
And hang on 1 second though, but Frank, you were saying that circles around back to what you do?
Right, because Bob's example was that he would interface with the client with regard to
Right.
purchasing a building or expanding it, et cetera. Before he even got there, we would have talked about with the client what the future growth of the company is. So the question you would ask is that too much space? Is that enough space? Should we just get a different building? Do we keep what we have and go to another state? Put a facility up there instead? All those kinds of questions. So it's just not a simple, very one-dimensional question or answer with
Right.
regard to the numbers.
Right.
You've got to take a look at the entire picture. And that's really what we bring to the table.
That's
that
what you
way.
bring to the table.
Yeah.
Exactly.
Go ahead, I'm sorry.
That's right. My question to
So it
you,
goes a lot deeper than just the topic.
Yeah.
I'm trying to get a feel of how your collaboration works together.
Yeah.
So if a client calls you first and you bring Bob in, is that client then basically billed through your company, or you get, how does it work?
No, we're separate.
Oh, you're separate, okay.
Separate, okay, so you're separate, it's a virtual corporation.
Okay.
Yeah, we didn't even think ourselves as
So I get as much of you or as little of you as I need.
Yeah,
That's it. It's not
whatever's necessary.
Which is really the key to the CFO 360 value proposition. Some of your clients you were saying need you once a year. Others of your clients want you around more often.
That's right. One client is 3 days a week. The other client is once a year.
Okay.
I do a
Yeah.
growth plan.
And
I mean,
being able to
that's
put a
all he
plan,
wants.
and selling no more than what the customer needs is a big part of them keeping you.
Yeah.
When they get to trust you and believe in you.
right.
And I want to also talk about, let's say we're making plastics, let's say we're manufacturing plastics.
Right.
There are a lot of little, actually, some of them pretty substantial manufacturers of plastic finished products
We
or
have
We-
one.
we
raw
have
materials,
one.
plenty in the area, right?
Right.
So I rented a small part of this building 20 years ago. I've grown inside the building and rented more and more of it. I may not know it, but I might be at a point where now I can buy this building and it would make a lot more sense than if I just keep shelling out rent for it.
Exactly.
But I'm so busy making plastic, I don't even think about that.
We do.
Right.
To me, that's a value
Right,
proposition.
and then I'm going to take a look at that. I have a client that I work for probably it's about 6 months, and I would say 80% of my time was spent doing a buy-sell. A buy versus lease. They were looking to move to another building. You're going to buy it, you're going to lease it. What are the scenarios about both? It was a pretty complex business with a lot of different arms and legs. So let's take a look at all those things that could happen. There are probably over 50 scenarios that I eventually produced, and I'm still producing them in a way for that client. But what if we do it this way? What if we cut off that part of the building? What if we sublet it? A whole bunch of scenarios. Let's take a look at what they all mean to the bottom line, and then compare one to the other, make a decision.
No, that's great.
You know,
Exactly.
and then Frank is going to pick up with the legal end on that,
Right,
and
okay.
the
Bring in the
contract
tax
piece of it,
attorneys,
and
et cetera.
tax attorneys.
Well, and that, I mean, that's the other thing is you don't do everything yourselves. You have a
No, it's
Mission
impossible.
Impossible Rolodex of associates you
Exactly.
pull in.
One of the things that I really kind of focus on is how to get the money out of the corporation in the most efficient way to the client.
Okay.
Because in essence, we're all about building wealth.
Right.
So once you get everything cleaned up, and once you get a really clear picture and vision of where you're going, and once you're starting to effectuate it, numerically, whatever,
Right.
then it's like, okay, so what are we going to do with this money? How are we going to position it? You know, are we going to spend it? Let's take a look at what we're really going to do. Are you going to buy another house down the shore you want to swap? That kind of a thing. And then we can kind of position things.
Well, you know, there's something else I know.
Our
with
clients all
business-
become wealthier.
Well, you know, and see, managing wealth and making sure that you don't lose any of it along the way. I'm going to be dealing with a lot of specialists on my own, so I'll have an insurance agent.
Right.
That insurance agent is going to sell me obvious insurance products like life insurance that I'm going to need. As my business grows, they're going to sell me a lot of other products probably to manage risk. what I like about working with guys like you is you'll come in and you'll look at that number that I'm spending on insurance and you'll say, it looks like a pretty big number. For other companies that are your size doing what you do, this is a much larger number than I've ever seen anywhere else. What are you getting for that?
Right, and you have to evaluate that vis-a-vis what the gentleman or the couple or the individual needs.
Right. Maybe that's
It might be
number.
appropriate, it might not be.
Right,
We
but
don't
you
know.
gotta ask.
You-
If you
you
don't
gotta
ask,
find
you
out.
could be spending a lot of money on things that you
Right.
might be overinsured. And it's a great way to lose a lot of money. That's a possibility.
Possibility.
And, so, I just think, I just see that as pure magic.
Well,
Are all your clients in the area? Okay, but go ahead, I'm
No,
sorry.
one of the things with regard, we're talking about insurance, let's talk about risk for a second. We're both really big on asset protection because all of our clients own businesses. They're all targets
Right.
for a lawsuit, right? You say the wrong thing, whatever.
Sure,
So we're really
hardly
keen-
ever in the news anymore.
Hardly ever, right. So we're really keen on making sure everything is well protected. We're not just talking about life insurance, but property casualty, liability, those kinds of things. If pieces can be put offshore, maybe wrapped in trusts, whatever, if that provides another level of
There's
protection.
other things that you could recommend that a
Exactly.
business owner may not think of on
Exactly.
their own because they just
Yeah,
don't have
and
the
and in one particular situation, we actually, we spun off another company. So we found out that there were several companies. One company was kind of into another product line, a service line, and we felt that there was the opportunity to spin that off into a separate business, to keep those two businesses isolated.
Yeah.
Because if something happens to one, that smaller business that you've just started, you don't want it affecting.
You don't want it affecting
where
your core business
Right,
that you
your core
depend on.
business.
And another
exactly.
overlay
Right,
is
that
not
makes
just
sense.
affecting it, but what about if you wanted to sell one? It's much easier to sell them
Right.
if they're
If they're
separate.
operating separately.
Yeah, it's a good
and there's
point.
We don't
wall
have to
kind of
pull
between
apart
them.
all the books and reallocate expenses. I mean, they're separate, they're clean, just put a sub on top of it in
Sure.
some way, shape, or form. It's
Sure.
easier for estate work. It works out
Terrific.
really well that way.
Okay, so your clients are people who make things. You've got manufacturing clients. You've also got service companies
Sure,
that you
yeah.
work with.
Hedge fund guys.
I'm gonna say family-owned business because I know that's a particular
Yeah.
sweet spot. What
Exactly.
about, talk a little bit about family-owned businesses and the magic of advising a family-owned business.
It's difficult because it's often not about the numbers, it's about the personalities.
Sure.
And particularly when you get involved in succession, we have a number of clients where there's a patriarch who doesn't want to really retire
Right.
or stop working, got kids. What do you do with these kids? Some want in, some do not. How do you balance everything out? Who gets what? We have more than a few that way.
Yeah, that's, I mean, and it's every family-owned business, let's face it. It's not like these are isolated cases.
Yeah, and it's not just immediate siblings or the
Sure.
children, it's the wives,
That's
Right.
true.
Yeah.
yeah.
Right.
the other husbands that have married in.
Right.
So you've got a lot of different people
Lot of
putting
moving
their two
parts.
cents,
A lot of moving parts.
a lot of moving parts.
And another thing, I'm thinking specifically now about service business. With manufacturing, I've got a product that I make, and I've got a process, and I've got
Yeah.
I'm part of a supply chain that's established. If something happens to me, that generally can keep operating. But in a service, or
of.
maybe not, because that's an area that you need to look
There
at.
might be some IP involved in a manufacturing process.
Do you own that?
That's
Do you
one of the
really own
things-
that intellectual property?
that's one of the things that we always
And
check.
if the worst thing that you can imagine happens, which happens more often than we like to think, do you own everything in that business? Do you really own that?
And as an example, that would be one of the things, the IP would be one of the things, if it's valuable enough that we would want to put in another corporation perhaps
Right.
Mm-hmm.
to protect it or sell it independently of the manufacturing
And it could
entity.
be that it's a manufacturing process. That
Most
intellectual
people don't
property
think of
might be a
those
product.
things.
They don't. They just don't have the time for it. And
It's a question of time.
and when it's too late is not a good time to be thinking about it.
No.
It's better to be thinking
Yeah.
about it before it
Yeah,
happens.
early on.
Okay, now, professional services. That's a particularly interesting case because very often that depends on the personalities of the individuals delivering the services. The
Correct.
value of the firm is a function of the value of the individuals in it. And if something happens to one of those key individuals, the value of the firm can be adversely affected.
Right, well, you can ensure those people as key people. That's very,
Straightforward, common.
yeah, it's often done. It's
yeah,
not a big deal.
but often not done.
Often not
Also
done.
often not paid attention to.
Correct. The trick that we provide is that, my background is actuarial work. So we can actually The trick is, how do you get the premium out of the company in the most tax efficient way? And if you do that correctly, you might be able to recoup costs at a certain point in
That you
time.
wouldn't otherwise. So
Exactly.
especially these days with taxable, with deductions down,
Yeah, exactly.
down as much as they are, there could be hidden deductible fees that you could, if you structure
Right.
properly.
And the other
you
thing
know,
that we
you
want to
find
do
that.
is we want to kind of foresee what tax rates might be in the future. I mean, administrations don't stay in office all the time.
Right.
You would hazard a guess today to say that if the current administration is gone and the other administration comes in, taxes are going to skew to the other end. So how do we plan for this? Let's plan for both ways.
That's very important.
Yeah.
Where are your clients? So I know you're in Philadelphia.
Well,
You're in South Jersey.
Our clients are all over. We have clients, joint clients, Chicago, Florida, North Carolina, here in the-
Minneapolis.
yeah.
Some of your clients probably have multiple homes, which means they're
Yeah.
not only
Oh,
all over, but
yeah. Well,
one
yeah.
client could be all over.
Yeah.
Absolutely.
Right.
Yeah.
Uh-huh.
Yeah,
And that
exactly.
the dynamics, by the way, of owning multiple homes in multiple states is another area we can
Well,
maybe
we,
help you
we
out.
want, we want to put the residents in the most tax favorable
Right,
situation.
Right, It's not just about the weather.
No.
It's about everything else.
Yeah,
In
no.
fact,
Not
we
at
did it. I did a study, and Bob backed it up. Client gave me 3 states to look at. We did all the calcs for this, and within like 6 months, house was on the market, gone.
That's it, done, okay. That's it, once they figure
Well,
it out.
you know,
What
if
am I
you're
doing
making
here?
substantial
Crazy.
money and you're in a heavily taxed state, that's a big number.
Yeah, that is a big number, and that's, and tax laws change. You keep on top of all that, so you're aware of
Right.
most of those changes.
That could
But-
be a year's tuitions payments.
Yeah, sure, exactly.
Well, that's another area where you can, and that's a big deal these days.
Right.
Especially, so.
Exactly.
Okay, so I think I understand, when we're making money, Joe, these are the guys we have to call. Because we want to make sure we get to keep as much of it as we possibly can.
Exactly.
That's right.
And there are probably people out there who are working so hard in their businesses that they don't really have time to take a helicopter view down to look at
Exactly.
it. And that's where you guys come in. Let's spend a little bit of time working on the business.
We take the helicopter view, and we also take it off their desk and actually get it done.
That's,
Well,
and
nice.
you, okay, on execution too, you'll do that.
Oh, yeah, we just don't
absolutely.
come in and throw
Yeah,
a report
no.
down. No, we actually do it.
Oh,
actually
yeah.
get it
No,
done.
I do all my own work. Sure, absolutely. You know, you mentioned something a little while ago that I wanted to comment on. Also, talk about service businesses, service-based businesses. I like service-based businesses because if you have a manufacturing business and you're doing, let's say, injection molding, and that product that you're making may be declining, you've
Right.
got to figure out what to do with that injection molding equipment. But if you've got a service business and you've got employees, you can offer a different product. It's easier. You don't have an investment in a particular piece of machinery that maybe cost a couple $1 million. You've got an investment in people, and you can move those skills or give them other tasks and other projects and think. It's easier. You can move on your feet or think on your
Right.
feet a little bit quicker. And I like those businesses because there's a lot of flexibility. So
That's something you can
so yeah,
really-
so if you got an issue here that I see, it's easy to make a transition over here. Manufacturing, we can help those people too, of course, but it just takes longer to turn that ship around.
Yeah, that's great.
Whenever you have capital equipment and stuff like that, if there's any obsolescence or something, you're really in trouble.
Yeah.
So,
Correct.
Yeah.
So you guys love what you do?
Totally.
Oh, yeah.
You like this?
Yeah.
Okay.
Yeah,
That's fun.
It's fun.
Is
yeah.
it really?
Yeah,
I mean,
it really
what's,
is.
What's the fun of it? Tell me, Bob, what's fun to you?
Because when I go into a company and I see where I can make it a difference, and with Frank and the two of us go into a company, we make a difference for that company, and they're better off at the end of that period, however you want to measure the period, than when we walked in. I like that.
Yeah, sure.
Yeah,
I like
it's
that.
nice.
Yeah, it's fun.
It's
I've
different.
just
I mean,
helped somebody.
You just made a difference to
I
somebody's
made a difference
life, and
to somebody's life.
And they're happy to see you when you come in. when you
Yeah,
come in.
yeah.
That's a good
Yeah.
thing.
Plus, the process is a kick. You know,
Great.
over a grilled cheese, you're having a cup of tea.
Yeah, right.
Right.
Whatever else, you're on a plane, you're doing this, you're doing that, you're places you've never seen before.
And so you're meeting interesting people, living interesting
Yeah,
lives, and you're
exactly.
helping
Sure.
them
Yeah,
out with
exactly.
what you know, and that.
Yeah.
Yeah.
that's-
And Frank and I are partners on these clients. We're also friends, and so
cool.
I
I can-
enjoy
I can-
working with Frank.
I can tell you they're fun guys to hang out with too. They really are. So we're at that part of our program. We get to tell everybody how to call you. So I don't know, Bob. We'll start with you. Look right into the camera. Tell everybody how to reach you for CFO 360.
Bob P. at CFO360.net. I'm sorry, bobp@cfo-360.net. I think about that one.
Okay.
And my number is 856-816-2230.
That's great, Bob. Thanks. Frank?
Phone number for me, 215, give you my cell, 514-5257. And my email, fspezzano@irus.com.
It's perfect. And
It's easy.
Joe, if anybody needs Dr. Joseph Assamendi, well, we don't know. Thank you.
Yeah, I hear you.
Thanks, Frank and Bob, for joining us.
You're very,
having
very
us. It
welcome.
was fun.
Thank you.
Lots
This
of
has been a
fun.
kick.
And thanks all of you for tuning in, and have a great weekend. And until next week, I'm Al Cini,
I'm Joe Osamendi.
and we'll see you again next week. Thank you.
Stay safe.